Afternoon and good morning,
Hello.
evening to everyone. Welcome to our IT Services in the AI Era webinar. I'm here joined by Philip, and we
Hi.
are Aventis Advisors. We are an M&A boutique for those who have not had a chance to meet us before. We focus on IT services and software, so we're very keen to share our findings and understanding of what's going on. And we want to help you make better decisions regarding your investments and regarding your businesses and how you want to take them forward, including the options to exit them. So we have a lot for today. It's an exciting time. And we were grappling with how AI is impacting IT services industry. I think after the last few weeks when we've been preparing for this webinar, we managed to get a good understanding. Of course, the world is changing constantly. So what we think of the future right now is probably gonna change dramatically in the next few years. But at least the next few months, I think we have good visibility. And we've spoken to a lot of people who are deep in the IT services industry. We've spoken to operators, we've spoken to investors to help you make sense what's going on in this space. So with this introduction, I think we can go ahead and start.
Yep, let's jump into it. So
Yes.
today we're gonna cover, let me just quickly go through agenda, how AI is reshaping IT services valuation and what's been going on in the public markets, what we're seeing going forward, and what are some of the winners and losers there. And then further on, what you need to do to build AI capabilities in your business and what acquirers are really looking at in terms of companies, in terms of AIs that they're using. And in the end, we'll have a bit of a discussion about what's going to happen when AI starts writing code and what's going to be the new role of the developers. So without further ado, let's jump into one of our standard slides, which is a high-level view of IT services margin. What are you seeing now?
Yes, before we jump to it, maybe two remarks. We will share the recording with you. And if you have any questions, feel free to type them into the chat box, and we'll be happy to take them at the end. Okay, so we show here the last 10 years of NASDAQ 100 performance and a handpicked index of IT services companies from around the globe that we've compiled. And I mean, in this particular time horizon, it looks like the industry is still doing quite well, although NASDAQ 100 is playing catch up, driven by obviously by the Mac 7 and the AI boom, which some call a bubble. I think the consensus it's a bubble. We'll see if it drags IT services companies with itself when it pops. But I mean, so far, been great. And the last year also has been definitely a good year for IT services, although it's a mixed bag, which we will show you later. What we wanted to traditionally here discuss is whether we're bullish or bearish. I think this time, and we rarely agree with Philip that much, but we're both bullish, so we'll maybe repeat ourselves. And to make a case in this point, here is what's happened.
Yeah.
since the launch of ChatGPT. Mm, there's no bubble, for one, in IT services, the purple line, which is already a good sign. The industry, I think, despite of the troubles, and the declining spending, and has been doing quite well. I mean, there are winners and losers, but it seems like overall, if you look at the average, it looks quite good. And from what we're hearing from the ground, from people on the ground, is that that clients are opening their checkbooks again and are willing to spend. So we're seeing that they're beginning to ramp up the investments. There was a moment after the COVID spending boom that companies started to economize on IT services spend. But I think they are ready to invest again. Philip, what's your take?
I mean, I'll go back to this slide with bullish and bearish, and I think I'd split also a bit the public stock market and the IT services industry in general. And I'd say that I follow, for example, public stock market valuations as a bit of a proxy of sentiment of what's happening, kind of how investors look at this segment. And even when I looked at it a year ago, some of the largest companies were traded at 30 times EBITDA, 25 times EBITDA, which is quite a lot. And for example, not what we saw in the private markets. So I saw that, okay, we still have way to go for some of these companies' share prices to decline. But after this year and after some of the largest companies declined a lot, so we saw EPAM, Endava, Globant, and so on, especially on the software development outsourcing side, I think they're much more attractively priced. Some of them already got into the territory where the earnings are negative, so there is a revenue slowdown, there is some losses for some companies. And I think that's the point where investors start kind of looking again at buying a lot, and a lot of investors will be looking at, okay, maybe I delist this company, figure something out, change it, reorganize, turn this around. So now I think maybe we're much closer to the bottom than we were a couple of months ago. So it is easier to be bullish from here. In terms of IT services industry overall, I think I agree with you that there is some positive momentum. And for last 3 years, everybody was saying, those are the tough years, the next one gonna be easier. And like 3 years passed, I think now it's first start to feel that a lot of companies downsized, optimized, and the revenue growth comes back, and there's potential to grow again. And we actually looked at the companies inside the index, because on the first glance, plus 30% over 2.5 years feels rather stable, but there is a lot of stuff going on under the hood. And here we looked at our 187 companies in the index, and for the largest ones, selected the ones which increase the most and which decrease the most, trying to figure out, is there AI here in play? Kind of what's going on, who's winning, who's losing in this new era. And I'd say for me, looking at who had the biggest increase for IG, Hungary, Clean Global, Indra, Comp, and what were the catalysts like space and defense, healthcare, space, cybersecurity, I'd say that there may be some losers from AI already on the market, but we don't see many winners across IT services industry. I think the winners are concentrated in AI, in software, so the NVIDIA and Mac 7. In IT services, companies that have been winning are focused on cyber, on space and defense, and benefiting from other themes on the market rather than AI, while the companies that are losing, it's probably a couple of factors with AI among others. So Endava, Globant, Grid Dynamics, Unisys, ASGN. So first, those companies were quite highly valued already. Yeah, so those are the examples of companies that were 40 times EBITDA at the peak. So they declined quite a lot, big repricing. I think investors are asking themselves, okay, with AI, can the growth rate keep up? How viable are the business models of those companies? And they became much riskier. So yeah, I think, those generalist companies suffer the most. Somebody who is betting on cyber defense, some specific vertical play, those are getting the investors' dollars and growing.
I would also add that what you see here on the right, the losers, they tend to be very large companies. And because of their size, they're difficult to adjust to the new environment. So, and as opposed to the companies on the left, maybe with the exception of Indra, they're not massive. So they tend to be more nimble and tend to be easier to steer on a new course.
Some of them, like, you get a couple of great contracts here and there. Here's a bigger investment in space and defense in Europe. You win a tender and you have the revenue growth.
Yeah, of course. Yeah. Another thing is that geographies are reshuffling. That's also interesting. That all the companies in the US have been doing so well for many, many years. And now you see the winners are distributed across the globe. So that's also very interesting.
Yeah, it would be interesting to see the chart. I remember we did some time ago about CE and US. US listed and CE listed, and there was like 3 or 4 times gap. I think that's gone.
I think it narrowed. Yeah. No, I think we have a slide with multiples in different regions. I think Europe matched, from what I remember, multiples in the US.
All right. So going on, we also took a look a bit on kind of what are some of the niches or themes where the companies are growing. We looked at LinkedIn, largest companies, and the companies which experienced the largest headcount growth over the past year. So as a kind of a proxy for revenue growth, IT services. So if you have grown headcount, likely you're growing your revenue with it. And we just ran some analysis and themes. Of course, AI, data, digital engineering. So everything related to AI and ML solutions, data platforms, analytics. Also with a bit of a caveat that a lot of companies are probably marketing this a lot. So some of them are growing with other kind of niches, but also kind of pushing themselves as AI players. Then cybersecurity is also a big thing. Managed security services, SOC, pen testing, incident response, and everything related to cybersecurity. I think it's going to continue to grow. Everything related to cyber and resilience, and we've seen today with Cloudflare issues. Hopefully, it didn't affect our webinar, but I think there will be more focus to keeping stuff operating. Cloud infrastructure, data centers, so everything which relates to cloud migration, setting up AWS, Azure, Google, data center design, build operations. I think probably a bit less relevant or fewer companies operating there, but just the cloud migration continues. I think it may be slowing down, but still, if you look at how many companies are running their on-premise infrastructure, it's still a big number. And finally, some enterprise platform specialists. Although here, while the market is probably rather flat or slow for all the big vendors such as SAP, Salesforce, Workday, ServiceNow, and so on, there are still companies that are growing or winning in this market, winning market share from from other players. So that's from our analysis of some of the companies that are doing very good, 30% plus headcount growth over last year, and there were very few when we looked at this compared to the overall industry. Those are some of the themes that emerged.
Where we are in valuations and what's driving them. On the left-hand side, we see average or median multiples for our index. Over the course of the years, you could say it's fairly flat, hovering around 10 times EBITDA. So it would seem everything is fine and peaceful, but there are some red flags which give some sense of uncertainty. And on the right-hand side, you see median quarterly EBITDA margin for the companies in the index. And we can see clearly that there has been a steady decline since COVID, and we're at levels seen last back in 2018 of profitability. What does it mean? It means either this trend will continue and there is a devaluation of IT services as a service, essentially. And clients are inclined to pay less for these services, thus there is less margin for operators. Or we just going back to normal, so we'll be moving in the band of 8 to 10%, like the times before COVID. I would be inclined, I don't know about you, Philip, that this will probably stabilize in this region. What do you think?
I agree. I think it will stabilize in this region. I don't expect this to come back to COVID levels. I think it's a very, very competitive industry, and just the laws of economics that dictates that the margins, will normalize at some level. And I think 10% is probably the average for S&P or for the economy in general. I need to check, but I think we're not gonna see IT services anymore as this, the best industry and the fastest growing is the most prestigious. So it's gonna stabilize around 10%.
Assuming there is no collapse in margins, I think the multiple is justified, and what we have researched before in one of our past webinars, that profitability is the biggest factor that affects the multiple. So long as it doesn't drop further, and we have to watch that carefully, I think the multiples should stay at this level. And then in the next slide, what's also very interesting, and we're trying to make sense of this, is where is the growth heading? Here you can see the quarterly year-on-year revenue growth, which is down substantially. And if you draw a trend line back from 2015 all the way to 2025, it seems like the industry is slowing down, which makes sense. I mean, it's maturing. It's already very large. It cannot grow to infinity. But the big question is, what's going to happen next? My hypothesis is that there was a slowdown and driven by uncertainty about tariffs and everything that has been going on in the US, including the lockdowns. Also, there has been cut in public spending on IT services in the US. I think we're past that. I think from here it's gonna go up. What do you think, Philip?
I agree. I think up from here. I think it's what you said, especially in the US, with some cuts to federal spending. And I think a lot of people shifted their spend towards AI, experimenting with AI. I think some of this money may be coming back. We discussed on our last webinar about SaaS also some of the statistics that for 80 or 90%, those AI experiments don't bring any value. So if we really see this, and if it's true, I think the companies may come back and say, okay, we played the AI a bit, but we need to modernize, maintain our major enterprise software, which was custom made, continue to do this. Yes, and that's where the growth will come from. So with this in mind, kind of revenue growth slower, margin lower, we're seeing also some changes in EV/EBITDA multiples by region. And here I think there are two major points: is that India continues to decline. And I think when we last had our analysis of IT services half a year ago, we were at around 20 still, but it kind of started to go down. And now it's around 16.5 times EBITDA. And I think that may continue. The Indian stock market can operate by its own rules. But we're seeing that the companies are being re-rated now. And the other interesting thing is European companies overtaking North Americans in terms of valuation, and really primarily because North America declined, not because Europe grew a lot. Yeah, so I think what we saw was some decline in spending from federal government, but also the troubles at the largest outsourcers, which are headquartered in the US usually and have most of the clients in the US delivery from offshore, from Latin America, Central Eastern Europe. Yeah, so they're not doing too well. So this red line is going down. But the companies are responding to that. And we've kind of tried to see, okay, what's going on and how firms respond to those challenges. And we saw three trends, basically. First one is a move to India. And I think this is what's been going on under the radar slowly, but still continued across many companies. And I looked, for example, recently at EPAM's annual reports. The Indian staff continues to grow. All the remaining regions are flat or declining. Same for many other companies. So this is in a response to declining margins, and companies are saying, okay, we have a bit lower margin. Let's shift some of our workforce to India, where the costs are still lower. The other one are headcount optimizations, and for the first time this year, I think we've seen that a lot of IT services companies, especially the major ones, had layoffs and had declines in headcount. So not only they're shifting people between regions, but also they're running some optimization programs in their main delivery centers. And I think that's can be related to AI a bit, as developers become more effective, so you can do the same amount of work just with fewer people. And I think what we're hearing is that junior positions are under threat, because this is kind of what's more prone to being replaced by the AI. And the third is a consolidation wave. I think that's quite a regular response from companies, that when the margins are declining, there is an increase in M&A. So companies joining together, trying to cut some operational costs, some general and admin costs, and some big funds are looking at this. I think we're seeing increase in interest from private equity funds, which are observing the situation, and that a lot of companies are not doing too well as an attractive opportunity to buy. And I think there's going to be some major M&A happening also in the coming years, where some of the big companies merge together, or maybe someone will get delisted from the stock market by a PE fund and turn around. Marcin, anything to add here?
I'm excited about my next slide. So we've been thinking a lot about the future of IT services, and wondering if IT services sector is going away because of the advent of AI. We came to the conclusion that not soon, if ever, which is great, encouraging. But at the same time, it's changing a lot in how these companies operate. So here we've summarized the conversations we've been having with people in the past weeks or months, and tried to distill how so far companies try to adapt and what are the winning strategy. strategies, and we've summarized them by size, so that's why the pyramid shape. The top, they're small but helpful. The bottom, chunky business opportunities. So I'll start with the top. A lot of companies, enterprise customers, and smaller ones as well, are open to experiment with AI. This doesn't make money for most people. There was this study that 95% of companies don't see any benefit from AI, and there's no ROI, which is fine. I mean, you're experimenting. How can you expect to see any return? So this, in and of itself, doesn't make money. Also for the vendors, for the providers, but at the same time, it's a great door opener. So we see a lot of companies who have the land and expand strategy to enter the client list, and they sell a small project, but then they get to understand the organization and see what's going on there, and identify a lot of gaps, and also have very high level discussions, because these AI projects tend to be sponsored by C-level a lot of times, and they have a keen interest in this. So this is a great way to put your foot in the door and try to get some higher value business. So we see this working very well. Second, a lot of companies turn to AI to unlock efficiency in project delivery. We hear that AI-aided developers are 2-3 times more efficient. Same with contact center support. I think this is pretty much a no-brainer, but has a big impact on profitability. So if someone does it well, I think will be on the winning side. If someone resists this change and tries to stick to their old ways, that will probably cost them a lot in the long run. Maybe not a massive opportunity right now, but medium term, I think this will be a big deal. And the last one, the biggest, I mean, a very often part of our M&A conversations is data, which is the foundation for any AI implementation. Without good quality data, there cannot be a good anything related to AI. That's why we see a lot of interest from investors and a lot of business coming from companies that focus on data. And this is a big opportunity, because once you take care of this is a jumping board to other stuff for the same client. And once you understand the data structures, you are capable of cross-selling a lot of stuff to them. So in itself, it's a big market opportunity. Then on top of that, I think you can build a lot. And I think someone who understands their client's data, I think it's hard to switch that vendor to another one, because eventually it will become critical. I mean, it is already, but even more critical than it is right now. Did you have anything to add here?
I mean, I agree totally with data. I think it's a lot of customers will realize now that this, the data is at the foundation of this pyramid. That if you want to do a chatbot even, or do some funny AI experiment, that at the end you're going to be asked, okay, where's the data is coming from? How do we teach the AI? How do we improve it? And you really need to accelerate the implementation of high quality databases, ensuring the data is high quality, and kind of garbage in, garbage out will dominate here. So what acquirers want from the companies, and I think here kind of we try to think a bit or summarize our conversations with the buyers over the past year, and notice some patterns into what the buyers are looking for, what they don't want in AI era. And I think that the growing themes are similar as we have shown previously on the list of growing themes in the fastest growing companies. So the buyers, especially private equity funds, like the companies that grow fast. And the companies that grow fast right now are in AI, ML, data engineering, cybersecurity, something vertical specific. And at the same time, those companies benefit indirectly from the growing demand, but those are also resilient. In that, when we looked at it, I think it reminded me of our last webinar when we were discussing software, and the more vertical focused your software is, the more kind of very specific know-how that AI doesn't have, there is in your product or in your services as well, and the more resilient your business is to some changes in AI. So I think anything where there is a big vertical expertise that's gonna be continued to be highly sought by the investors. And there are some neutral verticals, SAP, SAP, Salesforce, Oracle, Workday, so all the services around those vendors. I think there are companies that are doing well there. I think there are companies that are not doing so well. A lot of times, those are some individual company-specific factor. Maybe in a nice location, which is growing and where the vendor is growing, or maybe in a bad location where companies are kind of not investing more. So, for example, in Germany, where the economy is just not doing too well, yeah, I think some services around those vendors may be problematic. But overall, there are great companies. There are not so great companies. AI is affecting them a bit, but not really too much. And there are some declining themes that what we're seeing that investors are not actively looking at or passing on is pure play staff augmentation. So business models which are more focused on recruitment and hiring. So those models and are very competitive with low margins and are not too highly sought by the investors. And something which is related, for example, to UI UX front end development, other low complexity engineering. So that's where an investor will probably say, okay, but what's going to happen with this work in 2 years or in 5 years? And when you're exiting this business, is this type of work will be still done by people or will it be done by AI? And we don't know, and maybe not, but the risk is just too high and a lot of investors are not willing to take it. Anything to add, Marcin?
Nope.
Okay.
Yes, the elephant in the room. Where is AI right now? And this chart shows the progression of how AI or the leading edge models tackle software development problems. We're seeing, it's not exponential, but we're seeing very quick progression and convergence between different vendors. So eventually it's happening. I think that we can agree on that,
Yeah.
code, humans will not code indefinitely. But at the same time, I think there needs to be a human in the loop, and there's always going to be a human in the loop. I don't think the machines will ever understand how the real world and how human psychology and what's the human experience. I think there's always going to be a mystery around that machines just cannot grasp. That leaves room for humans and by extension IT services companies to continue adding value. So long as enterprises and companies in general have IT budgets, AI will not capture all of that. So there's still gonna be room for services provided by real human beings. And if anything, I think it will just give huge leverage to customers and to soft service providers to provide a better service to their customers. and build better products. So I think just the level of competition between companies will increase because they will all go to a higher level. But because of that, everyone will also elevate their standards. So I think we're gonna see across the board a huge improvement in quality, in comprehensiveness, and in functionalities that IT services companies deliver. But I think we'll be still in the same budget or even higher that goes to IT spend. So I think we're quite comfortable with the future of IT service. But at the same time, we anticipate, I mean, I don't see it any other way that people in the IT space will need to reskill, and I don't think everyone is capable of that. So there might be some turnover, but ultimately the role of a consultant or a developer will shift because they will add the human component to what machines cannot provide. So they will help with understanding user needs and bringing in that human factor and human sense and feeling for what works and what doesn't work. I don't think machines can take decisions on architecture very well. I think these problems will be quite complex. Someone has to check the quality of what the output is. Invaluable is the domain and big business expertise. So vertical expertise essentially is going to be more and more valuable. People will need to change also a little bit their mindset to fast prototyping. I think the times when you could work on a project for weeks or months or years, it's gonna be disrupted. And with tools like Lovable or Replit, I think customers will ask for shorter deadlines and will get growingly impatient to see results. And last but not least, what has not typically been associated with IT services, that creativity will be a defining factor because an IT services partner will ultimately be the shaper of the future of their clients to a large extent, and not only a person who blindly follows customers' requirements, because that's what machines are quite good at. So that's my take on how AI is gonna change our collective, pretty much human experience, and in particular applied to IT service.
Yes, I think there's gonna be a transition. It's not gonna be an easy transition. It's gonna be difficult transition, and I tried before preparing for this to read some of the developers' takes on AI in IT and whether it's going to replace or not replace them. And I think there's many more voices criticizing it and saying that, you know, it's not helping, it's worse, it's not going to work, and so on. So this transition will be difficult, and a lot of people will need to retrain or learn to use it. And maybe that's one of the factors that's responsible for the kind of lower performance of those massive IT organizations, that when you have tens of thousands of people who are rather entrenched, it's quite difficult to move this organization and turn this around very quickly. But I think, yeah, the value will shift from writing great code to kind of more soft skills, understanding the business, creating, checking AI, because AI can probably write a code or will write a code that's 100% correct, but it's gonna be generic, and as we see in everything else, it's kind of boilerplate standard and so on. So that's where creativity will matter, and problem solving, and understanding what people want. So we're up
Yeah.
for some changes, and that's maybe will be regional also. It will be interesting to see who will be the winners in this new world, where previously, the countries with strong engineering educations kind of were the big hubs, and who's gonna be next? Who's gonna be the big hub for soft skills and all that, what we discussed.
This reminds me of two things actually that happened. I mean, I don't remember the first thing from my experience, how cars replace horses. I think this is a similar process. It's just humans are in the position of horses. That's scary. That's the scary part. But I don't think humans will will share the fate of horses. I think we will. I mean, I'm the optimistic type.
The horses
So
are probably happier now than before.
there are just fewer horses, but they tend to do easier work
Yeah.
and more enjoyable, and they have an easier lifetime. Well, it's just there are fewer of them, but that's not gonna happen, obviously. I think we will have more fun in this space and more satisfaction, less tedious work, and ultimately, I mean, there's gonna be just much more business to go around because this is a huge enabler for all types of technology, and someone has to service that. There's no other way. It's just there's going to be even more technology embedded in everything in day-to-day life. So that's one thing. And the other thing, I mean, in the transition from on-premise software to SaaS, there was a dip for a while, and it took 10 to 15 years. Now it's not going to take so long. But eventually, I think the new business model, and companies will have to come up with new business models, has proven far superior for IT services firms. I think the same thing will happen in IT services. So honestly, I am a bit more bullish on IT services than software uh, because it's much easier now to create software. Replicating, I don't know, what you have as CRM or any other undifferentiated software is just becoming easier and easier, and the bills that enterprises pay are for software, off the shelf software, are huge. So I think a lot will be tempted to build in-house, which opens up a huge opportunity. So someone will have to build it, someone will have to maintain it, but AI is a bigger threat for software just because it makes building so much easier and so much faster. So
Okay,
that's it, I guess, about the future.
summing it up, Marcin.
What we found and what we tried to convey in this presentation, in this webinar, is that we firmly believe that the market and for IT services remains strong. There is obviously an adjustment which will be very fast, actually, by modern standards. It's much faster, happening at a much faster clip than other shifts. We see a fairly bright future ahead of this space. We see that margins are compressing, but also the reason for that is that companies have been resistant to change. But now, I mean, if they felt the urgency, and now I think more and more are, there are responses that are tried and tested by many. And I think the industry will adjust. And the responses we wrap up to relocating to lower cost location, resizing, so adjusting headcount essentially to turnover, and consolidation, so optimizing basically the expenses and cross-selling between partners that consolidate. So there are a lot of strategies that I think will keep the businesses buoyant. And obviously there seems to be a winning strategy in AI across the board. It's good to focus on stuff that is complex, that requires deep technical capabilities, and staying close to your customers with good understanding of their business and their needs. We see companies who are specialized thrive, while companies that are generic have been hit quite badly in the past few months. So that's it, I think, as a wrap up. Let's do a quick Q&A. I think we have a handful of questions. Roland asked us how we define IT services. So I think we try to make this webinar as broad as possible. And that's why I'd say it encompasses pretty much everything that is related to data and information and IT infrastructure. So that's question number one. Question from Ike. Ike sees companies with margins above 15 or above 20%. The companies have unique factors like global delivery, vertical focus, smart pricing solution. Whether this is also a transition task in IT service. The science of economics says that all the abnormal profitability gets diminished in the long run because someone comes in and replicates what you do, and these margins tend to go down. I think it's a matter of how big the next crisis will be. If it's big, I think there will be a scramble. But if the economy doesn't go through the cycle of creative destruction, then I think this will stay this way. I don't think this is a transient thing. IT services was driven by on-prem implementation. As SaaS continues to rise, IT services is evolving and declining. Would you agree with that?
I mean, partially, I agree that it's probably more work to be done with on-prem implementation rather than SaaS. But I wouldn't say that it's a significant difference. Yeah, I think it takes a long time also to implement some SaaS software. So all those big products like SAP,
and also
follows Salesforce, the transition to SaaS, it's a major driver for the revenue.
Yeah, and also vendors tend to share part of the revenue with their partners, which is great. Like companies like Microsoft, they have good deals on a lot of products. That is one thing. So that's supplementing the loss of the lost revenue.
I think where the revenue declines and kind of what we're seeing also among segments which are not popular, something like value-added reselling, yes, or supplying hardware, of course, it's going to be less of this. Yeah, so as companies go for hyperscaler data centers and they just don't need the server rooms and maintenance of that and the supply of.
Yeah. That's true. Yeah. And another thing, what I mentioned before, I think especially enterprise, I think they will get tired with their SaaS bills. And I think they will develop more stuff in-house. I mean, we've tried it ourselves. We're building a lot of our tech stack ourselves, and we're quite happy actually with the results because we get a better product that fits our needs better, and probably the total cost of ownership is less than if we had to pay someone. We remain bullish. I don't see the industry declining.
I think that what you said also on the slide about developers, that in theory CRM itself can be written by ChatGPT, but who's gonna implement this? Yeah, and that's where services kind of where the value will accrue.
Yeah, I remember we used to say to software vendors, software companies, not to have IT services and to focus on software. I think these industries will converge a lot eventually, but we'll see. Anyway, so it's been a great webinar. I hope you all enjoyed it. We'll be sharing the recording with all of you. So thank you very much for tuning in. And we invite you to the next one. In a month's time, we'll be sharing the announcement. In a month's time, we'll be doing a one big summary of the year, what happened in software and IT services. So we'll pick our top analysis and share them with you. And we remain open always if you want to discuss your M&A plans, understand what the market has to offer. We're here. Feel free to send us an email or LinkedIn message or a contact form on our website. And we'll happily jump on a call to speak with you. Thank you very much for your time and see you next time.
Thank you. Goodbye.
Thanks. Bye bye.